Hi everybody, my name is Miro Svoboda. Welcome to the channel. Today we'll be talking about tax planning and specifically when does it make sense to take monies from your RRSPs prematurely or immediately right after retirement, or even during tax years in which your taxable income is lower than normally. Not necessarily to spend the funds, but to move those funds from a high tax RSP environment to a lower tax non-registered portfolio, or possibly better yet, a TFSA. Conventional wisdom has been to defer as long as possible. If you talk to most accountants, they will advise you to defer as long as possible, and I'm talking about deferring withdrawals from your RSPs. Because as you probably know, you must convert your RSP to a RIF at the age of 71. And then a year later, age 72, you must withdraw about 5% of the market value out of your RIF when you turn, in the year that you turn 72. Whether you need these monies or not, you must withdraw about 5%, starting age 72. But, so let's look at somebody who retires, say, age 62, 63, and just to make the numbers really easy, husband, wife, they have about $500,000 in their RSPs. Well, projected to age 72, even if you were not to add any new monies into the RSP, just with the market action, your RSP market value should double. So now you're 72, your RSP between you and the wife is worth about $1 million, and you must withdraw $50,000 out of that RSP or RIF, whether you need the money or not. So on this slide here, you're looking at two scenarios, exactly the same family. All the variables are exactly the same. Their spending, their retirement lifestyle, their rates of return, inflation, all exactly the same. The only difference between the two scenarios is on the left-hand side, you're looking at conventional wisdom, which is deferring up until the age of 72. And then as you can see, pretty much right after 72, they are in OAS clawback territory. So for the first few years after retirement, they're paying very little tax because they're deferring and all of their funds are coming out of non-registered TFSAs and so on. But as soon as they hit age 72, they're in a fairly high tax bracket for the rest of their life. What we have recommended was, why don't you go into your RSPs right after retirement? Even if you do not need those funds to fund your lifestyle, just move these funds from high tax environment, from RSP or RIF, into a lower tax environment. If your TFSA is not maxed out, the number one logical vehicle would be the TFSA. Once the TFSA is maxed out, you can just move these funds into a non-registered investment portfolio, and doing so, you're moving part of your high tax portfolio from RSPs into a non-registered portfolio. For this particular family, as you can see on the slide on the left-hand side here, the difference at life expectancy, which is age 90, is about $500,000. $565,000 is the difference between those two scenarios. And as I said earlier, all the other variables are exactly the same. So these are pure tax savings. Now, obviously every family is different. Every family will have different variables, different retirement lifestyle. But for a lot of families, this will actually make sense. But you do need to have a plan. You do need to plan it out. But for most families, blended withdrawal will actually reduce your tax bill substantially. Now, every family is different. We understand that. But luckily, we do have a planning software in which we can project specifically to your family situation whether it is in your best interest to start moving assets from a high tax environment to a lower tax environment immediately right after retirement, or whether you should be for some reason deferring up until the age of 72. As I said, everybody is different, so unless we plug it into our planning software, unless we project these scenarios, it's very difficult to give you an exact answer. So feel free to contact me. My information is down below. Thanks again for tuning in today. We will be releasing videos on various topics, various retirement planning, tax planning, investment planning topics, almost on a weekly basis. So please subscribe to the channel, please like the channel, and have a fantastic day.